So I'm Allison Watson with Faegre Baker Daniels, and I've got the pleasure of serving as your MC for this morning and this afternoon in this session. And I'm going to kick it off by introducing the moderator for this panel, Mark Power. Professor Power is a member of the finance department in the College of Business at Iowa State University. In addition to teaching in the areas of risk management and insurance, he's involved extensively in research, consulting, and in continuing education activities. So Dr. Power, I'll turn it over to you for the panel.
Thank you, Allison.
Thank you.
Good to see you all. As Allison indicated, Mark Power from Iowa State University. In addition to doing the academic endeavors that I participate in, I also chair the university's benefits committee, and we have a self-funded medical plan. We actually use Wellmark Blue Cross Blue Shield as our third-party administrator, and we have participate with a consortium of Willis Towers Watson on the pharmaceutical side. We have about $100 million spend on an annual basis before discounts, and certainly we do a lot of monitoring from the standpoint not only in the medical side but the pharmaceutical side as well. I'll let Scott give you just a little bit about his background, and then we'll have a little bit of background on Kevin, and then we'll get into the program.
Great, thank you. Thanks everyone for coming. My name is Scott Sundstrom. I am a Vice President of Government Relations at Wellmark Blue Cross Blue Shield, and in that role interact with the government. We're obviously a heavily regulated industry, so there's ample opportunities to interact with the government at both the federal and state level. Wellmark operates in Iowa and South Dakota, so I have the opportunity to work with policymakers in both states. Iowa is a larger state, larger population, so spend most of my time working at Iowa. In Iowa, the Iowa legislative session is still ongoing, so lots of fun up there. I think we'll touch on a couple things that are going on at the legislature. Prior to working at Wellmark, and I've been there about 20 months, I was a attorney at the Nye Master Good law firm, see some of my former partners in the room, and was a multi-client lobbyist in Iowa. And one of the clients I served was a trade association that represented the life and health insurance industries in the state, so I had some background in the industry before joining Wellmark. So that's a little bit about me.
Kevin?
Thank you for having me today. Kevin Trebo, I'm with Optum Workers' Comp, Auto, and No Fault. We are a PBM and an ancillary care provider for workers' compensation, auto, PIP. About 85% of what we do is pharmacy. Pharmacy-related, PBM at the retail or mail order. And then we also have our ancillary, which provides durable medical equipment, medical supplies, home health care, catastrophic care, those types of things. So the easiest way to think about it is if you have an injured worker or an injured person, auto accident, PIP, anything that they need outside of a facility is what we facilitate for our clients, which are Travelers, AIG, New York State Fund, American Airlines, self-insured, large and small self-insured employers, and Sedgwick is a TPA that we also have as a client. I've been with Optum now for 17 years in government affairs. We do business in all 50 states. Workers' comp is very highly regulated on the benefit side, the actual care side. So we have lobbyists in about 10 states that we manage, and then we continue to do business as a lobbyist and advocate for our issues in other states. And before that, I spent 5.5 years working for the Illinois State Legislature in Springfield.
Very good. Next, what we'd like to do is just kind of frame the issue from each of ours perspective. And from an academic perspective, whenever I have the opportunity to meet with groups, I talk about the healthcare system. And I think the opioid epidemic is a systemic issue. It's not an issue with one part of the system. And I frame the system in a regulated environment. We have to deliver healthcare. And from the delivery of health care with regards to opioids in the United States, we consume 6.2 billion hydrocodone pills on an annual basis. That represents 99.7% of the consumption of hydrocodone globally. So we've got an issue with regards to delivery and how the pills are being dispensed. From the standpoint of the financing as a self-funded model, we're concerned about all of our prescription drugs. It certainly is an issue from the standpoint of the healthcare system. It is one of the biggest drivers of costs that we have at Iowa State University, and we monitor it very closely. Opioids are estimated in the United States to cost $580 $4 billion from the standpoint of an economic cost. So certainly financing is something that we need to discuss with regards to this problem. And then from the standpoint of consumption, and we all understand consumption. And consumption is a behavioral issue from my perspective. In 2017, we had 116 opioid-related deaths on a daily basis in the United States. In the state of Iowa, in 2017, we had approximately 200 deaths. This is certainly problematic, not only from the standpoint of the loss of lives, but also from the standpoint of the system and how the system is breaking down. So when we ask and talk about this, we're going to look at it from a regulated perspective, from a financing perspective, and from a consumption perspective as well. Scott, from the standpoint of Wellmark?
Yeah, thank you. So Wellmark participates in the private health insurance market, and I spent a little time looking at some statistics, and one of our best sources of statistics at Wellmark, which is part of the Blue Cross Blue Shield system, is our National Blue Cross Blue Shield Association. So the National Blue Cross Blue Shield system comprises 36 independent companies that operate in different parts of the country. As I said, Wellmark operates in Iowa and South Dakota, but the other plans cover the entire nation. And our national association did some deep dive statistical analysis of all the plans around the country, and they released a report last fall looking at the opioid crisis. And some of the kind of top level numbers I thought were pretty interesting. Nationally, reviewing prescription drug claim information, nationally 21% of every member of the Blue Cross Blue Shield system, and about 1 in 3 Americans get their coverage through a Blue Cross Blue Shield plan, 21% of the members had at least one opioid prescription in the year 2015, which is the most recent year there was full data available. In Iowa, it's a little bit lower than that. The number was around 17%, so we're doing a little bit better than the national average. And so, with the very large number of people who have filled at least one opioid prescription, and that has seen pretty dramatic growth over the past couple of decades, there has been a huge spike in opioid use disorder diagnoses. So you can look at the claims data and see folks who have had claims for that. And that nearly 500% increase was over the period from 2010 to 2016. And the year that saw the single largest spike was 2014. Now that number is obviously driven in part by increased use and increased actual opioid use disorders. I think it's also driven by a public awareness. There is a lot more awareness of the problem, so more people are probably getting diagnosed and getting treatment, which is a good thing. In fact, the numbers have gotten so large that nationally, almost 1% of all members have an opioid use disorder diagnosis. And of course, the number of people who have misused opioids is going to be much, much higher than that, because that 1% number is just people with an actual diagnosis. Even though there has been this nearly 500% increase in opioid use diagnoses, the increase in medically assisted treatment has only been 65%. So clearly there is a very large gap between the need for treatment and the people who are actually getting treatment. We can talk more about that as we go forward. And then I think one of the most interesting facts that this report uncovered is the single greatest risk factor for people developing opioid use problems through prescriptions is dosage. Length of a prescription is important, but dosage of the daily dosage is the single most important factor. And so they in the report, they broke down the statistics into kind of 4 quadrants based on lower high dose and short or long duration. And the low dose short duration obviously is the lowest risk factor. The single highest risk factor, though, was high dose short duration. And for those folks, 62 out of 1,000 people in that type of prescription regimen developed an opioid use disorder. And that is over 40 times higher than people who had low-dose, short-duration prescription regimens. And so that is, I think, a key factor, is keeping those dosages fairly low, at least when someone is new to an opioid prescription. One other source of data that I found interesting, the Kaiser Family Foundation recently released a report where they studied the large group, large employer segment. That's where most people in the private insurance market get their coverage, through larger employers. And they have seen some positive trends in the amount of prescribing of opioids that's happened. That number has dipped down a little bit over the last few years in that market segment. I think that's probably reflective overall. So that's some good news. I think we are making some progress on the prescribing side. There's more work to do, definitely, and we can talk more about that as well. But that seems to be getting under control. However, the negative trend is in the treatment. And it's good that treatment is increasing, but the costs of treatment are going up very, very fast. And in fact, just for this large group segment and just costs on treatment and just the treatment that is at least somewhat partially or fully covered by insurance, the large group segment in the country spent $2.6 billion just on treatment in 2016 alone. And that is a very, very large increase over just within the past few years. It's more than doubled in the past 5 years, and that trend line is going up, which I think is indicative of the need out there for treatment. So those are kind of some opening comments that we've got from our perspective, and we can talk more about things we're doing going forward to try to be proactive in dealing with the crisis.
Kevin, would you like to frame the issue from the standpoint of Optum and workers' compensation?
Yeah, thanks. There is no other healthcare marketplace out there where the opioid utilization is as big as in workers' compensation, right? There are two research entities, NCCI, WCRI, and I'm going to read off some information, but they're specifically research institutes that look at workers' compensation. But I wanted to set it, right? So for workers' comp, we're treating a physical injury. We're not treating cardiovascular, we're not treating diabetes, we're treating someone that has been exposed to a physical injury, damage to the body, and pain. Now, in group health, the drug spend is about 3 to 5%. In workers' comp, the statistics are about 35% of the spend is on medications. 70% of the pharmacy spend in workers' compensation is for treating pain. So right there you can see it is an area of the healthcare market that is open for exploitation, for opioid utilization. 30% of all prescriptions written for workers' compensation claimants are for opioids. 30%, a third, right? So we're not writing cholesterol and high blood pressure and lifestyle drugs, we're writing opioids. We're filling opioids. Of the 10 most prescribed drugs, you could probably name the top 2. OxyContin, Percocet. Those are the top 2. So it's an issue in workers' comp. I've been in government affairs for workers' compensation for 17 years at my company, previous company that came with Optum. And if you would have asked me about things such as physician dispensing or compounds, which are rampant in comp, which we don't see in group health, which also have an opioid connection, 12 years ago I would have said, oh, what are you talking about? I would have looked at you like you had 2 heads. If you would have asked me about opioids 12 years ago, I would have been able to talk about it. Because I think we've seen it so much in workers' comp that those providers in workers' comp, especially from a pharmacy standpoint, and from a public policy standpoint, and from an insurance carrier standpoint, saw the risk, both financially and to the lives of their injured workers, that they were a little bit ahead of the curve of what we've seen in some of the other markets. Workers' comp is opioids. We're treating pain.
We started out framing the issue from a regulatory perspective, so I'd like to ask Scott if there are any regulatory initiatives that Wellmark is trying to promote that they think might be able to reduce or mitigate the opioid problem that we have, and also get his opinion on House File 2377 that pertains to certain types of regulations from the standpoint of prescribing.
Right. So Wellmark is trying to be more proactive in addressing the opioid crisis, and one of the initiatives that we rolled out just within the past couple of months is to align some of our prescribing coverage practices around the Centers for Disease Control guidelines on opioid use. And so what that means is primarily for people who are getting a new prescription, new to opioid use for acute pain, expected to be short-term pain, there are going to be limits around the initial prescription, absent special circumstances that a physician might point out to us. And new fills will be limited to a 7-day supply and be limited to a dosage amount of 90 morphine milligram equivalents. And those statistics I gave before when I talked about the risk being low dose, high dose, the cutoff they used in that study between low dose and high dose was 100 morphine milligram equivalents per day. So we think that 90 number is a good dividing line. And so another thing that we're doing is around prior authorization for longer or higher dosages. So it's possible that a physician can get a prescription that's different than that, but they need to provide some specific reason that's specific and special to that patient. And we're not applying this to chronic pain, palliative care. So think, someone with a cancer diagnosis, who is going to be in pain for a long period of time. That's obviously a very different situation. We're not applying to that. We're also utilizing step therapy in our prescribing guidelines so that folks should start with an immediate release opioid and only move to an extended or longer term release opioid under special circumstances. Because again, those longer term opioids have been subject to more abuse. While they're extended release, there's been the problems with crushing the pills to have the total amount of opioid get released immediately. It also keeps the amount of opioids in your system higher over a longer period of time. So we think that should not be the first stop. We're also utilizing trying to be more focused on data and monitoring. We've got a drug utilization review process and algorithms in place to try to determine if there are either prescribing problems or utilization, drug-seeking problems on the part of a patient or a member of ours. And so we try to look for, problem areas and then address those. We are trying to do work with our data through our accountable care organizations and using that data at a population and to the extent we can at an individual level to look at folks who maybe have what we call pain clusters, which are kind of a range of diagnoses and treatments and medication history that might show a higher risk, and try to pay special attention to those types of people and populations. And around our coverage design, we're very focused on having our formulary, our list of covered drugs, be designed. We have an independent group of pharmacy and therapeutics committee that's made up of doctors who practice in our states, Iowa and South Dakota, with expertise in various areas, and have them design our drug coverage programs, both what drugs we cover on the front end for pain and what drugs we cover to treat abuse or addiction on the back end, and make sure that those are scientifically driven and effective, and keep that updated as much as we can. And then we have robust coverage for both inpatient and outpatient cognitive therapy and drug treatment programs. That's very, very important around those things. Switching gears to the legislation that was mentioned, there is a bill pending in the Iowa legislature. It has passed the Iowa House. It is pending in the Iowa Senate that puts a range of public policies in place to try to address the opioid crisis. It's an outgrowth. There was an interim committee that met last fall to discuss the opioid problem in the state. And that legislation is primarily focused on prescribers and pharmacies. It doesn't directly touch payers, but it's hopefully some important steps in getting better data and controls around overprescribing. So for instance, Iowa has a prescription drug monitoring program like most states do, but it is not mandatory that prescribers use the program. So the bill would make it mandatory for use of certain controlled substances like opioids. It would put more robust data and monitoring around dispensing prescriptions. So if there's areas that might look problematic with particular patients, we'll direct state agencies to be a little more proactive in pushing out information around that. It will put some more limits around prescribers on types of education they need to have and monitoring of their activities. And so I think it's a series of positive steps. Now, oddly enough, that bill, while I think there's very widespread support for it, has gotten stuck in the Iowa Senate. I think it will become unstuck, but this is just an example of the legislative process at work. There is a state senator who is a retired pharmacist, so he obviously takes great interest in issues around prescription drugs. And he is also interested in medical marijuana issues and has filed an amendment to the opioid bill around medical marijuana issues, which are highly controversial. So that's kind of got everybody nervous about the bill. I think that will probably get taken care of, but it's been kind of stuck for a while. So that will probably be enacted at some point in the relatively near future as they wrap up the session, but you can't take the politics out of politics, I guess.
Kevin, workers' compensation obviously is a heavily regulated area. Are there any initiatives that might be out there that could reduce the opioid problem that we have?
Yeah, this is one of the areas, Scott was talking about it a little bit, with the legislature, and it becomes very political. I think this is one of the areas where the insurance community has worked very well with the regulators. Right? It's easier to get to the regulators. They're able to understand the subject matter. They're subject matter experts because they work in the Division of Workers' Compensation. But by the end of 2019, we're going to have 19 states that have some type of treatment guideline specific around pain and opioids, which the doctors will be required to follow when they're treating. And if it's a deviation from that, if it's greater than 90 MEDs per day, doctor, you have to tell me why that patient needs greater than 90 MEDs a day. You just can't write the prescription. We're going to have 12 states that have formularies. And again, this is where the insurance committee went to the state. Texas and Ohio are great examples, where they went to the state and said, look, workers' compensation, once that claim is deemed compensable, it's 100% pay of medical, right? I mean, it's just kind of wide open because you want to make that injured worker heal and get them back to work. Well, that included the opioids. So in Texas and Ohio, they put in place opioid restrictions and a closed formulary. I'll give you a quick example. Ohio put in an opioid restriction. You can only go to one doctor. You can only have one prescriber. You get locked into one pharmacy. You're going to have a treatment plan, and if you deviate from that treatment plan, your doctor is going to say, I'm no longer treating you. And you're going to have random urine drug testing to make sure that you're taking what I'm prescribing for you, or you're not taking something else, or you're not smoking something else that you're not supposed to be while you're taking these opioids. And they have experienced that the claimants that are getting opioids since 2011 is down 44%. And their cost for opioid spend, total pharmacy cost, is down 48% in Ohio. And Texas is very similar. Their claimants that are getting above 90 MED is down 19% since they put their formulary in place in 2011. So they're regulatory tools that give teeth to the payers and the providers to say to the injured worker, it's no more carte blanche. You have to really treat for what the pain is. And if it can't be solved by opioids, can we look at physical therapy? Can we look at acupuncture? Can we look at other things? And Texas is actually experiencing about a 20 to 25% increase in physical therapy. At the same time that the opioids are going down, the physical therapy is going up.
How do we balance so that we don't emphasize the abuse management versus pain management?
That's a tough question, and I'm not a physician, so I can't necessarily answer specifically, but I think that's where the payer community and the PBM and the pharmacy and the doctor all need to work together. And we do have instances where you have injured workers that are critically or catastrophically injured. And at that point, you need to understand that there's a regulatory structure, but at the same time, you have to have some compassion for that injured worker. But I think if you know this going in, so if you look at siloing the injured workers from new injured workers to those folks that have been taking opioids for a prolonged period of time, if I'm a new injured worker and I know going in I have this treatment agreement with you and these restrictions, then I think I understand my parameters of care and I think I should be able to abide by that.
Very good. I'd like to switch gears just a touch and talk about the changes that are taking place in the healthcare system from horizontal and vertical integration. So I'll start with Scott. Wellmark works with a lot of physicians groups, hospitals, et cetera. Is the horizontal integration that's taking place going to be positive from the standpoint of the healthcare system, and will it help us gather information so that we can better take care of individuals that are abusing drugs?
Yeah, it is a very interesting time, both within the provider community, and I mean, even in Iowa, we've seen tremendous consolidation within health systems within the last few years. So that, that's an interesting and ongoing development. And that has its challenges, but I think it also does have the potential, as health systems become more integrated and more sophisticated, their technology becomes more sophisticated, their use of electronic health records becomes more sophisticated, their ability to share information among all the providers within their network, and then hopefully someday, without their network, as well. So if I go see someone at Unity Point and then I go see someone at Mercy, they can talk to one another. I think there is hope that can develop. There's also been a lot of ongoing integration within the payer side, both pharmacy benefits managers and health insurers. And that is an ongoing challenge. It'll be very interesting to see how those deals work out. I mean, the big ones lately have been between pharmacy benefits managers and insurers, and that they're coming together. The idea is that they can leverage huge amounts of data across the country to improve outcomes and reduce cost. That is no small challenge, and so it'll be interesting to see how that works over time. We're a smaller plan, and so that's not where we are in the world right now. And watching how those national plans and national PBMs manage through all this will be very interesting in the future. I will say in Iowa, one of the biggest challenges for us in this space really is outside of all the business issues, and it's just the shortage of providers. If you look at the data of the number of providers who can provide substance abuse treatment, Iowa has a very small number, and in fact, the number of providers actually dipped down in 2018 as compared to 2017, and that is a real concern, and that's a longer-term problem that I think we've all got to work collectively to solve in addressing the future of this crisis.
What about on the vertical integration side, Scott? UHG, Optum, DaVita, any comments with regards to the efficiencies that we may have?
I think it goes to what Scott was saying. As a workers' comp division and a PBM, a provider of care, we're having the ability now, we're exploring the ability to share the data and information from the group health side to the workers' compensation side. Doing the analytics can help you better predict if there's a potential for this individual to become addicted, or if they've had other addictive issues, or in some point we'll get to there where we can look back in the group health data and say, 4 years ago you had a 6-month period where you were taking Percocet for a wisdom tooth, and now you're an injured worker, and that should throw up a red flag right there to that workers' comp carrier who's using Optum, which is part of United, which shared the data, to say, the first time we see an opioid, we got to talk to that doctor. The first time we see a long-acting opioid, we really got to do a deep dive on this individual. Very good.
Scott, you briefly mentioned the ACO. I know that Iowa State University participates in the Accountable Care Organization with Wellmark. It's worked out very well for the university. Do you think this is a solution from the standpoint of sharing information and also more closely monitoring drug use?
Yeah, I think that's definitely a piece of the solution. As data tools become more sophisticated, that can be very, very helpful. To have a better sense both of population health, the total aggregate health of people. You can help develop strategies and treatments that work better when you have good, robust population data. It also has the potential to help individuals, so that when someone goes and sees the doctor, that doctor has a more full sense of that patient's health history. There are some barriers, particularly under federal law. There is a federal law that predates HIPAA, the health privacy law that everybody's at least somewhat familiar with, that is focused particularly on substance abuse, and it prohibits any sharing of information about a person's use of substance abuse treatment from a federally assisted facility, which is virtually all of them. And that is a real challenge about sharing data within an ACO model about folks' prior substance abuse history, which could be a helpful piece of data when they see a doctor in the future. So there are some challenges around that, but I think there is promise that can be a way to leverage the the huge amounts of data that both payers and health systems have about the people they serve.
One last quick question for Kevin, and that is the Teamsters Union now has filed a lawsuit because of opioid problems. Do you think that's a pathway that will result in some positive?
I think it could, but I think you've seen some of these other lawsuits, the state attorney generals and other group health programs, employee benefit programs are suing Purdue Pharma and some of the other ones. I personally, I think it's a better opportunity to work with the policymakers, both in the state capitals and at the agency, workers' comp or mental health or whatever, your state Department of Health, to really drive policies on the prescribing and utilization versus the lawsuit. I think you'll accomplish more with looking at some of what the other states have done and adopting that for your jurisdiction.
Okay, very good. Any summaries?
Well, I'll just add very quickly on that point about the public policy. There are the lawsuits, and then there's also, you'll be shocked to hear there's money in healthcare, and where there is money, there is lobbying and public policy initiatives. And one of the things that we've seen that I think is a real concern is some of the lobbying efforts from the pharmaceutical industry. I mean, I think it's pretty widely understood that Purdue Pharma, maybe some others, were so aggressive in marketing and pushing opioids that's what kind of started this crisis, moving, because there's so much push to prescribe opioid, treat pain. Pain is the fifth vital sign. There's a crisis of undertreating of pain. And so obviously that went too far. Now what we're seeing is, the industry's obviously not trying to justify that behavior so much, but what they're trying to do is essentially profit off the crisis itself. And they're doing that in a few ways, and some of which are kind of concerning, I think. And I know we're running out of time, so I'll be very brief on this. But for instance, we've seen legislation that would mandate coverage of what are so-called opioid abuse deterrent formulations. Mm-hmm. And these are formulations of usually long-lasting opioids that are supposedly harder to crush or get the whole opioid dose at one time. And those have mixed success at best. And there is some real risk about pushing people to prescribing those under the false assumption that they're safe, and that's a solution to abuse of opioid prescriptions. So that's been a problem. There's been a lot of lobbying around treatment and drugs that can treat opioid abuse problems, and there are some real questions around some of the efficacy versus the cost of some of those things. So there's a lot of stuff going on, some of which is positive, some of which is not. And I think it's important for all of us as citizens and are concerned about this to pay attention and make sure that public policy solutions really are evidence-driven, science-driven, and data-driven rather than profit-driven. And I know that's always impossible to entirely separate those things, but I think it's important that we all pay attention to that.
Yeah, so we've got the delivery side, we've got the financing side, and we have certainly consumption, and we have issues with all three. I think one of the things that we definitely need is to integrate and to apply some resources in order to be able to develop non-addictive drugs, and also to do a better job of using the data that we have in order to help folks out that are having problems and to make the system more efficient.
I don't know, but one of the things that I wanted to mention is we've seen 27 states now put in place these initial prescribing restrictions, which are great, right? You don't need hydrocodone and acetaminophen for 20 days when you have, a shoulder dislocation from playing weekend softball. That's great. You're going to stop the problem up front. You're going to stop the access. But as insurers and policymakers, we cannot forget about those 142 people a day that die from some type of opioid problem addiction. That train has left the station. So while you focus on one, you can't forget about the other people that are out there. They need to be healed.
I think we're done. Thank you all for being here. We got the signal. 2 thumbs up.
They'll unmic it in the back there. Thank you. Thank you, Mark. They'll get you all unmiked in the back.
I didn't know if we were supposed to stop at 11 or not.
We're fine.
Okay,
We
we're
did
good?
it. Good job. Thank you.
Very good. You're
Thank you so
welcome.
much.
Yep.
Thanks.
Nice to meet you.
Very nice to meet you. Thanks.
Can I help you?
Okay, perfect. Thank you.
I'm sorry.
Okay, I said, well, I'll be introducing you and then
Okay.
and I'll turn it
No
over.
problem. Thank you.
Make sure you hold the mic up.
Yeah, I heard. And does he's got a lavalier, right? No,
You hand him that.
All right, Kevin, Scott, and Mark, thank you for the interesting discussion, and we'll move right on into our next panel. Let me introduce our moderator for the second panel, Rodney Branch. Rodney is EVP and Chief Marketing Officer for Athene and serves as a member on the executive committee. In joining Athene, he brought more than 20 years of experience of marketing and brand experience in the insurance and consumer products industries. Before Athene, he spent time with Prudential and brings the perfect skill set to moderate our next panel. So Rodney, I'll turn it over to you. Thank you.
Good morning. Thank you. So I'll be brief. As a moderator, I know that my job is to get to the panelists as quick as possible so you can hear information from them. As mentioned, I'm the Chief Marketing Officer for Athene, and we, as a company, like a lot of companies, are thinking through how to deal with some of the changes that are happening in the digital and data space and what impact that will have on our business. And as I was thinking about it this morning, it reminds me, so I grew up on the Gulf Coast in Houston, Texas, and it reminded me of, every summer in Houston, there are storms that'll form in the Gulf, typically. And one of a few things will happen. Either A, the storm will dissipate and nothing will happen and it misses you. And so you say, no big deal. But you also realize that there are other storms that'll come, right? It's just the nature of the beast. B, the storm could actually hit and bring rain, and actually it's a good thing, right? So it could actually bring rain and not too much rain, and it actually is a good thing for the environment. And there are a lot of people who believe some of the changes that are happening will be good for us if we can get through it. The third thing that can happen, it could actually miss you. So it could miss our business, could impact other areas, but the storm could take a left turn or a right turn at any point in time and actually miss you and impact other businesses or other homes in the Texas analogy. Or the fourth thing that can happen, it could be a direct hit. And so as a personal story, last summer when Harvey hit Houston, it hit my brother's home, and he had 4 feet of water in his house. And so now that was in August, if I remember correctly. Now he's still rebuilding. And he has this challenge of, how do I rebuild in a marketplace that I know other storms will come with a business or his house that probably is about 60% of the value that it was before the storm hit, right? Because no one wants to buy a house that's been rebuilt in a storm-plagued neighborhood. So as I think through the technology changes, I think a lot of businesses, Athena included, are trying to predict what might happen. Is it going to be a big nothing burger? Might we get hit directly? Is it going to miss us? What do we do? How do we prepare? And so I'm looking forward to hearing the insights from this group so I can learn a little bit as well as you guys do. So with that, I want to introduce, I'm going to put my tea down, Donna Peoples. So Donna is the Chief Customer Officer for Pipestream Incorporated. So if you can give her a warm welcome, I appreciate it.
Okay, I'm going to get my clicker real quick. And as Rodney said, my name is Donna Peoples. I am the Chief Customer Officer at Pipestream. a small startup company growing like crazy out of New York, if you couldn't tell from my accent. So probably interesting to you guys, though, in this audience. My last job before I joined the startup was as Chief Customer Officer for AIG. And so, like you, I was struggling with, how am I going to deepen the engagement with my end users using technology, but also meet the regulatory, data privacy, and compliance issues? And I don't know about you, but it was my experience that technology was underserving the highly regulated industries. So fast forward to 2015, I encountered this company, became so in love with it, and what the possibilities are, I'm there now. Packed my bags from Atlanta and moved to New York, and I'm changing New York, one New Yorker at a time. So look out. So has anybody ever heard the term FANG? Like teeth? Okay, we got one. So it's what has literally turned communication and engagement on its head. That is Facebook, that is Amazon, that's Netflix, and that's Google. Totally changed the way we think about how we engage with businesses and brands. Doesn't matter if it's an insurance company or Amazon. If Amazon can do it, we expect everybody to do it. So fast and seamless, make it easy for me. One of the things that we're also seeing is that self-service is taking over. Gartner predicts that by 2020, 85% of our relationship with brands will manage, and we'll do it without a human. You believe that? Incredible. So simplicity drives satisfaction. There we go. So here's the reality. Who gets excited about calling a call center? Ever. Especially insurance, right? We can keep it in this room. It's our secret. Nobody gets excited about buying insurance, and I certainly don't get excited about using it. So, how do we think about that? You're lost in the IVR abyss. You're switched from one rep to another. Or the dreaded, I'll get back to you, which never happens. Now, that applies not only to selling insurance, to getting those quotes and binding those policies. It also applies to service because it's about commerce, it's about content, and it's about care. So once we get those customers, I think it's equally important to think about the customer experience at the higher level and the journey that they're going on, because it's cheaper to keep them. And if you don't believe that, just ask my ex-husband. We're going to have fun whether you like it or not. So I've brought some stats to you, and I wanted to share with you too. Who in here has children? Yeah. Okay, well, I don't know about you, but if I want to talk to my daughters, I have to text them. They got no idea what it means when the phone rings. And I got to tell you, if they call me, there's blood or money involved. So I freak out. But that's the way we expect to engage. It's no surprise that the use of these smartphones, it's taken over our lives. I sleep right next to mine, closer to my phone than my husband. So, the use of these devices for telephone was overtaken in 2016 by the use of those devices for data. So fascinating that there's the opportunity to really change the way you think about how you do business, how you create more intimacy with your customer. And it's more about chat. It's about creating a space where you can really interact with the end users, where you can solve problems, where you can transact, and you can do it in a space that's secure. Little company called Facebook got in a little bit of a mess recently about data privacy and security. A lot of companies will say they're secure. That does not mean your information is private. One of the things that we've done as a company is made security and privacy a hallmark so that enterprise data of our clients is their enterprise data always. We don't have access to it in transit or at rest. We don't store it. It's the enterprise's data. And I'll show you a quick architecture of that. The other thing that I want to tell you is that, we've been talking about multi-channel, omni-channel for years. Now, because of technology, we have the opportunity to really create a connected experience for the customers, whether they're policyholders, whether they're agents or brokers. So whether it's on your phone, whether it's through a call center, whether it's on the web, even email. And one of the stats I showed you before, email open rate, if you're getting 20%, you're doing good. What we're seeing when we send out a message is that there's a 98% open rate within an average of 3 minutes. Incredible. And you can target, you can broadcast to many, you can slice and dice your data by product, by geography, psychographics, demographics. It's a world of opportunity. So as I said, it's about automating those processes. How many times do you have an end user call you up and ask you what's the meaning of life? Or what color socks should they wear today? Very rare. So it's a very prescribed process that can be automated in a way that's constructed to get as close to 100% resolution as you can every time. Think about all the forms that have to be filled out. How many of you get those forms filled out accurately and completely every time? Through automation, you can do that. I mean, think about how powerful that is. Think about the FAQs, those repeatable calls that your reps are taking. And insurance is taking those interactions with customers 89% of the time through voice. Consumers don't want that. 45% of consumers now say they'd rather deal on their own terms, and they're agnostic as to whether it's a person or whether it's a chatbot. They just want the problem solved. They want it made easy for them. So this is the architecture. How many people suffer through a federated model as far as their systems go? Oh, you all have connected systems. That's great. I'd love to have you as a customer. So if you think about on the front end, all those different touch points where your end users come to you. I mean, think about phones, think about web, think about call center, think about email. Think about the evolving Internet of Things and the wearables. Think about SMS. Think about Facebook. That's a way where we can reach out and we can create either a proactive outreach or a reactive engagement. The magic of Pipestream is really in the pipes with a Y. It's a conduit for communication and for engagement. Everything that happens in that pipe is your data. Everything is automatically date, time-stamped, and stored. So there's non-repudiation around who said what information was transferred, or when it happened. That's also where our chatbots live. And they are built for purpose. Not all chatbots are created equal. Some are frivolous and gimmicky. These are built for utility, function, and accessibility. We also have industry-specific natural language understanding. So you guys use a little bit different language than healthcare. You use a little bit different language than energy or airlines, or pick your industry vertical. So we apply that understanding as well. So where most companies are getting about a 70% understanding on NLU, we're getting about 90%. And then the other, the other side of the coin is on this stack of systems, whether you've got an off-the-shelf system, whether it's Guidewire, Duck Creek, whether it's Avaya, SAP, Oracle, all of those systems can be connected. Even your homegrown systems, even those systems that have been customized or not been kept up-to-date version. We can also do automatic escalations to agents if the chatbots have done what they've been designed to do, but your humans are used for the higher touch, more complex, more emotional solutions. So it's the best use of everybody's time. So I don't know about you, but it's been rare in my career that I've found a solution that can help me solve for top line and growth, but also help manage my middle line. That, my friends, is how you get to the bottom line. Thank you.
Thank you, Donna. So I want to now introduce Alan. So Alan Egbert is the co-founder of Ask Kodiak. So welcome, Alan, to the stage.
Got it. Thank you. All right. Good morning, everybody. So per introduction, I'm Alan Egbert. I'm co-founder of Ask Kodiak, and we are, the best way to describe it is we are a SaaS platform that allows insurers to list programs and take the mystery out of risk. So think insurance search engine. There's my title slide. Advance. Thanks. All right. This was a little bit more interesting than what I was just showing you. So the only thing I'm going to mention about my company is actually, where does this crazy, ridiculous name come from, right? So this is my dad, the one on the right, obviously, and this inspired like the brand of this new SaaS platform we were going to build. And my team is 15-year insurance technology veterans, but we were specific about this brand to kind of do something different. It's personal for me, obviously, but this is where the name comes. It's as simple as this. There's no crazy story. I've heard some much more interesting stories than this, but this is my father spent years in Alaska studying brown bears. So that's where the name comes from. There we go. All right. So once upon a time, I was CTO of a company called Agency Port Software. We did agent portals, we did upload, we did forms extraction. Enterprise software company with dedicated sales teams, marketing teams. I had 20 to 25 people. Really nice budget. Really nice parking space. Really nice Boston Harbor view from my office. Did I mention I'm in startup mode again? So those things all go away when you go back to startup mode. But we followed an enterprise sales kind of methodology. It was in concert, all of these groups, sales, marketing, and then product, where I spent most of my time as CTO doing the POCs, doing the RFPs, doing these 18 to 24-month sales journeys. And so, next slide, please. This is my conclusion. If you could advance the slide for me. This is where I landed. After all that time, this is the only conclusion I made. So I have irrational reasons why I hate enterprise sales, which I'm going to ignore today, but there's some good stories there. But there's some real rational and real reasons why I'm kind of opposed to this. Now, I'm not saying it's wrong. I'm not saying you shouldn't do it. And I was trying to think of other metaphors. Like, I hate Brussels sprouts, for what it's worth, okay? You may like Brussels sprouts. That's fine. We could eat together. We'll get along just fine. But for us and for a startup, this wasn't going to fit for a number of reasons. One, economic reasons. I'm not going to have the budget for an enterprise sales team. I hate forms. I hate filling out a form to get to somebody's content. And who's got time for that? Cold calling. I'm terrible at calling anybody for anything, so cold calling is definitely going to be out for our team. Emails. Everyone gets hundreds of emails a day, so you're competing with that. So for us, it's got to be a process to get to our potential customers that fits more in line of what's convenient for them. And that's really what this comes down to for us. It was a matter of convenience, and how do we get to our market? So can you advance the slide for me? There we go. So number one, this is kind of the internal mantra of my team, whether you're a developer, a marketer, or even a salesperson. It's convert visitors to users. I'm talking about sales, and I'll probably use the word growth interchangeably because we actually think of it more as growth. But if a developer says to me, hey, I want to add this feature, and it's really cool, they get stopped immediately, and it's like, why do customers going to care about this? And why are more people going to sign up for the platform? Like everything gets driven from this. Same in terms of our goals in terms of growth. It's about converting visitors to AskKodiak.com or any of our content that's out on the web into coming to our website and ultimately signing up. So, next slide, please. All right, so how do we do this? In our world, we had to combine sales and marketing. It's really a growth team. And principle number one is we remove barriers to all of our content. We just put it out there. Anything that we publish, anything that we write, because we're trying to build an audience. And you got to remove barriers to do that. People will say, well, are you worried about people ripping off your stuff? And it's happened. But you got to get a broad audience when you're starting out on day zero where nobody knows about you. And we were a team who's had a pretty large footprint with some of our old technology. And I can assure you, when you go back to startup mode, nobody cares. It's reset. You are anonymous, and you got to prove yourself all over again. Number two is removing barriers to sign up and use our platform. So if you're an agent, you can go sign up, start using Kodiak right now. If you're an insurer, you can go sign up and start using the platform right now. I want as many people coming to see what we're doing as possible, so we remove the barriers to sign up. We have a lot of free options, just a lot of features that offer utility to allow people to explore if this is even a solution that's interesting to how you guys look at problems that you may have internally. I'll explain more about this in a little bit, and I'm going to show you how we use data to kind of track some of these activities. So the growth team, which is sales equals marketing, it is all about removing barriers to get to any technology that we're putting online. Next slide, please. All right. This is real. This happened last week, actually. So Donna was just talking about chatbots and messaging. So here's a little, I'm going to pull the curtains back on what we do a little bit. This is not Kodiak. This is our kind of our sales platform that's on the website. So, question, is this a chatbot or is this me? Who thinks this is a chatbot? Who thinks it's me? I had no hands. Is there a third option I'm missing here? All right. So there is a third option. It's actually both. If you come back to visit us after a certain number of times and you spend a certain amount of time on AskKodiak.com, that first message tries to engage you in conversation. You could see the person replied with thanks. And I was literally in a coffee shop in downtown Boston where I got it, and I was talking to somebody, and I completely blew them off. Now, how's this for conversation, right? I blew off who I was talking with to get on my phone so I could engage that person at the time they were on my website looking at our stuff. Because data is showing that optimizes your chance of getting someone super interested in what you're doing. They are coming to me on their time, not me calling them in between the 20 meetings that they have during the day. And you could see, whoever it is, they laughed. I actually know who this person is now, which is the next part of this story, is we were going back and forth on chat a little bit. I had doubts whether or not this approach would work. My co-founder and I argue about this at least once a month. But this is a way for me not to miss people coming to the website, but still try to have a conversation with them. And the goal is to get them to see a demo or to get them to sign up, which, next slide, please. We're able to have more interesting conversations in terms of what they're doing on the platform. So I mentioned earlier, I have a free tier. I have users who have been on Kodiak for 2 years on the free tier, which is fine. They give me feedback. I talk to them every so often. We learn more about what's missing from the product. They're customers. I mean, they're non-paying customers, but we still consider them customers. But this helps us see what is worthwhile in the app and what is not working in the app. My biggest failure as a CTO of my last company is we did not spend enough time taking stuff out of the product that no one was using. It's called technical debt. It is, I mean, can you think of a more boring term? But it's expensive for support. All of us who touch legacy systems, the technical debt is large because we didn't keep track of that stuff as we're going along. Not this time. I did too many years of putting those fires out. So we spend as much time removing features and code out of Kodiak as we do putting features and code into Kodiak. All right, next slide. And that's the goal. Convert users to customers on our platform. The moral of the story here is, if you have a technology platform, if you're selling agent portals, if you have people coming to your website, the best way to engage them is to get them to use your stuff. And that's how we sell. And I think I got one more slide to say goodbye. So any of this stuff is interesting, email me. Always love to talk about it. I know I said I hate enterprise sales. I'm actually obsessed with the sales process. I spend a lot of time studying it, understanding it, what works. But this is how software engineers sell technology. I mean, that's the moral of the story. So that's it for me.
Thanks, Alan. So was that a real picture of you, the dad and the bear?
What's that?
Was that a real picture of your dad and the bear?
That's
Wow.
real, 100% real, yeah.
Scares me just looking at it. So thank you for your comments. So next, I want to introduce Miguel. So Miguel, come on up to the stage. Miguel Edwards is the Vice President, Strategy and Operations for Allstate. So let's welcome Miguel.
Thank you. No slides.
No slides?
No slides. Oh, how about a handshake? Morning, everyone. Awesome. Just so I get an idea of who's here. If you're a carrier, raise your hand. Awesome. Agents or MGA? Okay. Solution provider, vendor. All right, awesome. So I want to recover some time for the group because the last discussion on opioid addiction went a little bit over, and it was far more important than what we're talking about, I think. So I'm going to cut a lot of what I got this plan thing that I always do. It's the same thing, and so I'm going to save us some time and hopefully get to some questions. But let me do this. I'll start with a real quick story because I'm calling it a big audible. I'm going to try this whole new thing out on you guys. A couple months ago, my son comes upstairs. I've got 4 boys, crazy house, and tells me, Dad, there's water on the floor in the basement. And I'm saying, well, what did you guys do? I thought it was their fault immediately. And so I go downstairs, and what I find is that my hot water heater is leaking water all over the floor in the basement. So I guess I should know better. The hot water heater is original to the house, about 20 years. I'm surprised I got that much out of it. I guess that's my technical debt or my mainframe or whatever it was. And so I call the plumber, and the plumber takes me through some options. So I don't know, I could do tankless now, I guess. Or I could do a 30 or 40 or 50-gallon model. It can be short, it can be tall. It could be, 30,000 BTUs. I mean, options out the wazoo. And I'm taking this all in, trying to make an educated decision on my hot water heater. And we finally land on an option. I drop $1,500 for this hot water heater. Show up, I come home, I want to survey the job. Race into the utility room where the hot water heater is, and guess what I saw? A hot water heater. A little bit shinier than the one that was there. I went to the tap to go turn on the water, and guess what came out? Hot water, geniuses, right? Amazing. And so I was somewhat uninspired. Imagine how uninspired my wife was, my customer, at the fact that I just replaced the hot water heater, and now there is hot water. Amazing. So I got to thinking about this, and I feel like this is what we do in our shops as insurers, as agents, and even the solution providers in terms of what they bring. We spend thousands of hours on RFPs, on cost-benefit analysis, on all kinds of things to replace our hot water heaters in our carriers. Now, don't get me wrong, it's important, right? We don't want water on the floor in our insurance companies. We don't want to not be able to put out hot water or AKA policies, but we spend all of this time working on things that matter so little to our customer. Anybody ever see a customer comment, so glad you moved your policy admin to the cloud? Policies are coming out great now. right? No. And at the end of the day, what it means is the fact that we are investing time on things that don't engage our customers, on things that don't matter to them. And that's been the dominant narrative for all of these conferences for a number of years. And it's just the past couple of years or so that the narrative's starting to shift a little bit more, starting to shift more into things like customer engagement. And I think that has come from us in the insurance industry taking a page from some of the disruptors out there, the Ubers, the Airbnbs, the Netflixes of the world that said, you know what, we've got to come up with a different way to engage customers. And if you think about a couple years where the direct-to-consumer movement really took off, that was kind of the entry point. That was the beachhead to customer engagement. Let's come up with some funny commercials with little tiny animals, and let's talk about how we're going to save you some time buying your insurance policy and all of that stuff. And that worked out. It was working out really well, actually, so much that a lot of the pundits foretold the demise of the agent channel, right? It's interestingly enough now, the agent channel is growing again. And why is that? That's because about 90 million millennials or so turned 30 over the past couple years, and their risk profiles have changed. And now they're moving over to needing a trusted advisor to manage their risk. But they still want the engagement. They still want the engagement. So we have to try to find ways to engage customers, and that's got to happen outside of the insurance transaction. Nobody calls up an insurance company because they're excited about getting a quote. They don't want to engage us, they have to. It's the law to get a mortgage, right? So they're not excited when they call us for that quote. They're certainly not excited when they have to pay the bill. And they're not excited when they file a claim. And that's the limit of our interaction, of our touch points. That's it. That's how we interact with them. So how do we differentiate through customer engagement? And Allstate has been trying to tackle this feverishly, and we've got a couple different things that we've done that seem like it's really starting to take hold. So just a quick couple of examples of what that might look like. We have, as an example, a digital locker so that customers can catalog their belongings, right? So that in a time of a claim, they can track their belongings. We acquired a company called SquareTrade because millennials don't believe they need insurance. Not for their non-existent homes, it's for their apartments, but they have a beautiful TV that needs a warranty, and they all certainly have an iPhone, so we found a way to engage them in that respect. Roadside assistance, right? Again, a non-insurance way to engage customers. I'll give you an example of a company that I think absolutely killed it, and it should be the model for us to kind of emulate. It's called FIGO Pet Insurance. FIGO Pet Insurance has come up with a model where 90% of their offering, and I'm estimating I'm a customer, by the way, I'm estimating based off of how I use it, has absolutely nothing to do with insurance and is not monetized. It's all free interaction that's based off of my love of my dog. Actually, my wife's love of the dog. She loves the dog more than she loves me. And so when you look at the sales process and when you look at the interaction model, what's on their app, their mobile app? And by the way, it's entirely mobile app. That's how you interact with this offering. If I want to know where the closest dog park is, right there. Oh, wait, that dog park in Chicago, you got to have a dog license. Well, that's good to know, right? If I want to have a doggy date with another black lab, I can find other owners on the platform that have it. If I want a GPS pet tracker, if I want to track all of Roxy's medical records and get my phone to buzz me when she needs another shot, that's all there. And that's the value of the platform. They just happen to sell pet insurance. And so I'm a customer. And by the way, I'm hooked. I'm hooked in tight. And so if another pet insurance offering comes around that's 50% cheaper, am I going? Nope. I'm still there because I'm invested. And that's exactly how Apple's got me too, right? I'm invested. I've got Apple all over my house. I want to try Android. I can't. It's too much. Switching costs are too high. So that's the whole notion of customer engagement. And that's for me, what selling in a tech-driven world is all about, is finding ways to engage customers outside of the insurance transaction so that we can differentiate. So I'll leave you with a very quick little framework that I try to use in my shop to approach these things. And I think I would argue that Rusty Sproat, the CEO of FIGO, approached it in a similar way. We've got to start thinking more about customer focus, about the customer's problem, and get out of our rates, rules, forms, filings, processes, and trying to force customers into things that we do. We've got to figure out what the customer wants, and as we start doing that, we'll learn more about their lives and how to interact with them. And there's a process to do that. It's called design thinking, and it's a 6-step process. And it's a little bit hard sometimes to make the leap to what we do to leverage that, but I'll give you the framework real quick. The first step is to empathize. Again, we've got to get out of our shops, we've got to get out of our products, and we've got to go sit down with people, not necessarily just customers, and understand what their world is all about. Understand what a value proposition is for the various generations. And once we have empathized with them and we understand what all of their issues are, what all their concerns are, then we can move to the next step, which is to define or reframe a problem based off of that information. What we'll find likely is that the problems that we're trying to solve for are very different than the ones that we thought we were going into. So first we empathize, then we define. And then from there, we can go and start ideating. And that's that quintessential board with sticky notes all over it, right? So you get into that design shop. You know idea is a bad idea. We start grouping them and putting them together. Some of us probably already do that in Agile. If we do some Agile, that's how we kind of do our stories, et cetera, et cetera. And then this next piece, which is one that we're actually not very good at all in terms of prototyping, because we like to spend a lot of time getting things perfect. Absolutely perfect, right? I see a lot of heads nodding, right? Spend 18 months, right? Run 10,000 test scripts, make sure it gets through all of the architecture, all error-free, and then we release it to market, and then guess what? Obsolete. Or it's not actually the requirement that we actually want. It's a little bit different, right? So we wasted all of that time, and then we have to fix. So prototyping instead says, let's just get something out there. Let's get it built. Maybe it's a storyboard. Maybe it's something that's not even clickable. And let's take it out there and then do the next step, which is to test. Let's actually ask customers what they think about it. How easy is it to use this UI? Is it engaging? Does it matter? Is it compelling? Will it make you do something that you wouldn't have done otherwise? Do that test. And then once you've tested, then you can implement. And then you implement, and then you iterate on those implementations. So it's a design thinking approach that I'll leave you with that I suggest that as an industry, we would do well to manage. My last plea is really to the solution providers in the room, or as you're having conversations to the solution providers, is we need, as carriers, we need more options for customer engagement beyond the insurance transaction. That's the best way we're going to differentiate. So that was the first time I've ever done that pitch and that plea. So thank you for bearing with me. Hopefully we created some time so that we can have some questions afterwards, because I'd be very curious as to what you guys have on your mind. Thank you very much.
Thank you, Miguel. Great comments. I love your comment about customer engagement. I definitely want to have a question on that when we get to the panel. So next I want to introduce Ryan Hanley. Ryan is the Chief Marketing Officer for Trusted Choice. So Ryan, come and welcome to the stage.
All right. No slides. No slides. No slides. All right. Thanks, brother. All right. I need you guys to help me out here. I have a vlog. That vlog is called The Show, and it's how I tell the story of the industry that I want to work in, not the industry that we work in today. So I'm going to need a little bit of your help. I'm going to force you to engage and wake up a little bit. I need you to say G-I-S. Can you do that? 1, 2, 3. G-I-S. Oh, my God. Everyone says the insurance industry is boring. Is that true? I've been to cocktail parties with most of you in this room. I don't think that that's actually true. A little bit louder. G-I-S. All right, now I'm going to film that, and you all are going to be in my vlog, whether you like it or not. Because I only got a few minutes to do this, so I'm getting what I want out of it. No. The truth is, video is rapidly changing the way that we tell our story because it forces us to be authentic. We can't hide in video. If you're super corporate on video, you're super corporate. If you are funny on video, you're funny. Who you are is who you are. You can pretend, but then everybody knows the truth. So by using video, and again, the purpose of my vlog is to build the industry I want to work in, not the industry I work in today. Not that there's much wrong with our industry today, right? It's pretty close to perfect. But maybe there's a few small tweaks that we can work on. All right, so we're going to selfie this thing. We're going to go GIS, and I'm going to rotate. Now, most of the people sat down at this end. That's why I'm focused down here. But I love you guys, too, just so you know. OK. Now, remember, I'm going to go 1, 2, 3. And then I want you to say, all right, cool, cool. And I promise most of this has a point beyond being self-serving. All right. We ready? Here we go. 1, 2, 3. Oh, you guys are nice. Thank you. I appreciate that. That means a lot to me. And y'all will be on my vlog. I don't know why I said y'all. I'm from New York. So, all right, here's the point. I said I want to build the industry that I want to work in, not the industry that I work in today. Well, how do I know what that industry is? I was a boots-on-the-ground independent insurance agent for 8 years. I did the business. The industry that most of you people are trying to disrupt, I love it to death. You are fighting me every single day. My wife still owns that agency. Actually, my wife's twin sister, her brother, and my father-in-law own the agency, so now you know why I don't work there anymore, right? But the truth is, I have a firm belief, whether warranted in real facts or facts that I fudge, the truth is, I believe that having a human involved in the insurance transaction is one of the most important aspects of that transaction. And I don't care how much AI Chris Cheatham wants to put into the process. At some point, they need to talk to a person. They need to build trust with a thing. And you can't tell me that a bot or any other version of a form can do that the way I can build trust. You want to know why? A crappy independent insurance agency has an 83% retention rate. That's the worst of them. My wife's independent insurance agency, which is $3 million in revenue and grows between 7 and 12% a year on predominantly middle market personal lines. We're not talking the super sexy high net worth stuff. We're talking middle market, home, auto, and an umbrella, $1,200 package policies. She grows a $3 million book of business between 7 and 12%. At 93% retention rate. So, when we stand up on stage, and again, when we stand up on stage and we say things like, the insurance industry is broken, brokers don't know what they're doing, they're providing a poor customer experience, 93% of the personal insureds of my wife's family's office think she's doing a bang-up job. And it's easy to switch today, right? 20 years ago, it was really tough to switch your insurance. And that's why we used that as a negative, right? Oh, if it wasn't so tough to switch, people would go where they wanted. And those humans, man, they're just so dumb and slow, and they don't pick up the phone, and all these things that we like to say about them. Guys, here's what I want to share with you today. I believe that success in this space lies in the brackish water. Now, how many of y'all are sailors? So everyone else has no idea what brackish water is, or were you good at English? Right? Brackish water, where salt water meets fresh water. Okay, salt water meets fresh water. This actually happens right around where New York City is. We can live in salt water. We can live in fresh water, right? We can be old incumbent traditionalists who are building nothing but walls and trying to keep all the newfangled stuff out because we have such a good thing going. Or we can be in the fresh water, right? We can be fun and tech, and we can go after renter's insurance and pretend like anyone cares about that. And what my point is not to bash a business model, but to say that success actually happens in the middle of those two things. To survive today, and I believe well into the future, you have to be a hybrid. You have to be able to survive in both areas. You have to have 1 foot in one bucket and 1 foot in the other, to just mix metaphors, but kind of similar if one of the buckets had salt water and one of them had fresh water in it. Right? This is where success happens. So my plea to you is not to subscribe to my vlog, which you can find on YouTube by just searching my name, Ryan Hanley. It's not to come to my amazing conference, which is in Cleveland in June, on June 24th. It's that when you think about the solutions in the marketplace, when you think about the work that you're doing, understand that today, insurance consumers across the entire spectrum of the universe still statistically prefer to talk to a human at some point. Now, I believe where in that transaction is going to shift, how often they talk to a human being is going to shift. I think all the technology that we've been talking about, chatbots, IoT, all these things are incredibly important aspects of our business and will become more and more a part of it. But if your conversation points involve cutting out the human beings, I vehemently believe that you are doomed for failure. That's my personal perspective. I just am waiting to be proven wrong by a statistic that that's not true. So my hope is that we think about the future not as one or the other. Incumbents in traditional organizations inside our industry need the technology sector more than they've ever needed it in the past. But the same is also true. The same is also true. There are insurance carrier professionals sitting in this room who work for organizations that have been in existence for 150 plus years. How can we say that they don't know what they're doing or they're doomed for failure when they have billions of dollars under management and have been around for 7 generations, right? So I have a soapbox. I like to stand on it. But I'm thinking about all of us and what the services that we're providing consumers. And I would love it if our conversations shifted from one or the other, us versus them, to how do we all work together? How do we all start to mash this thing up? Because it's in that brackish water, that tumultuous place where no one really knows what's going on. It's tough to see the future. It's tough to survive. But ultimately, that's where the magic happens. And I think that by marrying the things that we're working with, not to bring it all the way back to the title of this, but that is actually how you sell in a tech-driven world, or whatever the title of this panel is supposed to be. Right? It's by getting the people to the humans at the moment they need that human, which is going to be different for every transaction and for almost every consumer. So I got 2 minutes left. I'm going to wrap up, because if there's any questions, I think we're probably almost out of time, aren't we? Yeah, so I get to do the questions. Who's got a question for me? I got 2 minutes left. Anybody? Question for me? No? I crushed it then. All right.
How much time will we have for questions? Okay, let's get the panel up. And can you give me a signal about how much time? I don't want to run too far over.
11 minutes over.
Yeah, 15 minutes will be perfect. So we'll just look to you to give us a signal when we get close. So let's welcome the panel back up. So I have some prepared questions, but I'm also going to ask questions from the audience. So that's going to be the way in which we work it. So thank you guys for your comments. One of the things I was thinking about, and I thought when I first joined the insurance industry, one of my first meetings, so as background, I spent a lot of time in packaged goods marketing. And when I joined the insurance industry, I'll never forget one of our first leader meeting was after, I think it was 2005 or 2006, when Katrina hit Louisiana, New Orleans. And the insurance company that I was working for showed a video. And in the video, they talked about how they and we responded and had claims team on the ground, et cetera, et cetera. And it was a really happy, feel-good video. But as a new guy, I noticed something. So we had claim catastrophe trucks out, and we had people that were sitting behind desks and typing in on a computer, and there were probably lines of 10 people per representative. And we were talking about what good service we provided. And for me, as a new guy in the industry, I said, that doesn't look like very good service to me. And I thought about if I was at a grocery store and there were 10 people in line and they didn't open up another register, I would be upset. And I would have like a $50 bag of groceries. Relative to spending money or sending money to the insurance company for 10 years or 12 years, however long I had a policy, this catastrophe happened and I have to wait in line with 10 other people, and I would say that's good service. So it struck me that maybe we don't know what business we were in or are in as insurance industry. And if we were in a customer-focused industry, or if we knew that we were in a customer-focused industry, would we be where we are? So I just wanted the panel to maybe react to that. And Miguel, you said some of that in your comments, so maybe I'll start with you. Maybe just react to that. And first of all, is my impression wrong? Secondly, what are your thoughts about how we address those things?
No, I think you're exactly right. I think we've had an unusual benefit of a very complicated industry with a lot of regulation and things that make customers beholden to us. And we don't have to work hard for our customers. Now, we have to work hard to fight amongst each other for our customers. But at the end of the day, our products are necessary. And it will be interesting. And what I'm waiting for are those disruptors that come from outside the industry when some of those things start to change and we're not ready. and we'll have to really differentiate on how we offer what we offer. So I think you're exactly right, and that was the essence of what I was talking about. I think the interesting component is, and I look at some of other consumer products and services that actually take time to map out a person's journey through life and create interception points at various points in their life. And I envision a world where, as an insurance company, I can map a person from the time that maybe perhaps that they're born. And I've got something for a person at every single stage of their life, insurance or not.
Right.
And that's how I build these long-term, long-lasting relationships. And I can think of a lot of other products that operate that way, where they're always finding ways to be in your world at the right time, at the right place, and providing value. And I think that's where we need to move to.
Anyone else want to comment on that?
Well, I mean, I think, as I said, the customer is the ultimate disruptor in this equation. And to your point, I think, insurance, I used to have battles with some of the folks in the industry that said claims is our product. And I said, no, it's not. You're wishing bad things on people if claims is your product. The reality is you have the unique opportunity to be at a point in a person's life. Maybe you can't fix everything, whether it's a fender bender or it's a natural catastrophe, but you can make it a little bit better. And then, through technology, kind of bringing it back to your line at Walmart or wherever you are to try to get service, think about technology as the ability to scale. I mean, we had Harvey recently, and we worked with a BPO TPA outsourcer. This call center was able to, at scale, reach out proactively and tell those policyholders that were likely going to be impacted what the precautions were. And if they were impacted, what did they need to do? And then they could reach back out to make sure they were okay. And guess what? If they needed to file a claim, they can do it on their smartphone, taking pictures or videos. Having that claim started, getting the adjusters out and assigned based on skills. So I think that's really the opportunity.
I agree.
Miguel, you mind if I jump in there?
Absolutely.
So I think I agree with Miguel and Donna in principle on a lot of the stuff. I think that the way customer experience is handled can definitely be done different. The one thing that I caution us on is, and sometimes I worry, is that we retain the respect that we have for what we're actually doing. So you compared $50 in groceries to having your home rebuilt, right? That's a significant difference.
Absolutely.
It's not 1825 when the barn falls down. We all rally together and everyone brings potluck and we raise that barn back up, right? The only organization that is going to get your home rebuilt for you is the insurance company. So I think that as we think to things like customer experience and the front end being a product, I absolutely positively agree with you that we have to add that, as long as we don't add it at the expense of the fact that no one is rebuilding your home if it's not the insurance company. And I know that that's not what you were saying. I just wanted to make that point that I think we have to do both, which makes it even harder to do.
Mm-hmm. Yeah, I agree with you, and I think the reason I was making a comparison is because I know, but it didn't bother me. But the reason I was making a comparison is because I think there's a higher level or standard of expectation in terms of that customer service experience, right? And so, to your point, I think it has to, shouldn't say it likely has to be delivered face-to-face, human-human, right? But then there's a higher level of standard, and we can't look at it and say, well, that's good, if we're not viewing it from the customer's eye.
Yeah.
Any questions from the audience before I go? Got a question over here. I guess, am I the only one? You have a runner mic? Okay, great. What's that? Front row. Front row.
Hi, I'm Bob Frady with Hazard Hub. I'm wondering, for the carriers, do you think that you have built such a low floor of consumer expectations that you'll never get past that to become proactive with the end consumer? Or how are you approaching that particular issue?
So what I would offer is we understand that a customer's expectation of us was their last best interaction with anything or anyone. So if they had a great experience with Uber, or if they had a great experience with Blue Apron, they're expecting a great experience when they call into Allstate. And that's the only way that we're going to keep that retention. They'll search and search and search and search until they find what they want. And you might have a lot of churn in the industry, and that doesn't help anybody. So we absolutely at Allstate recognize the fact that we're not competing necessarily just with other insurance companies. We're competing with everyone for customer experience. So I love your question. It's a phenomenal question. And the answer is no. We have not created a low floor. We're actually striving for that premier customer experience through any channel. Whether you come in through the direct, the independent, the exclusive, whether you call our call center, whether it's through our chat, no matter what it is, we're striving for that premier experience.
Alan, did you want to weigh in?
Yeah, and I'm not a carrier, so my comments will be a little bit different. And I also wanted to say I didn't know Hanley was bringing a prop up on stage. I didn't know so.
I've been carrying that thing around for like 3 hours.
So yeah, so when we talk customer too, like a lot of it is, all right, we're talking about policyholder. Like for me, my customer might be an insurer who subscribes or agents that use the platform. So the best quote I heard about customers has come from, it's a consumer brand in Boston, which of course I'm blanking on their name. I'll remember it 10 minutes later from now. But I do remember that the key thing they said is, they were asked, well, what about, you're entering a space that's filled with competition. What are you going to do about that? You just raised money. And their answer is, we're not worried about the competition so much as we're worried about customers and customer retention. Whatever that means for whether you're making mochachinos down the street at Burismo in Cambridge, Massachusetts, or you're selling insurance policies, or you're trying to get people on your technology stack. You could lose them, you could win them back, and it's a never-ending battle. There's never like a flag that you plant down either, and it's like, hey, we're there. Because to your point, someone's always entering the marketplace in terms of on-demand video, and they start looking at everything differently from that point forward. So.
The way I think about it, I think that as a leader, there are a couple of ways to look at it. One is the short term is, you're in a particular category, how you grow within that category. And it may require you to look within the category to say what that looks like. But then secondly, how do you prepare for the future so that the category remains healthy as you're driving share within the category? And one of the things that I will tell my team is that we don't want to be Marlboro in the cigarette category, right? So where the category is flat and likely declining, I don't know that for a fact. But we're the best of that, because ultimately that's not the way in which we want to work, especially given the opportunity that exists in our particular category. I am more on the financial services side, and for a while the financial services side has said we should be growing, but we've remained flat. And there's a disconnect that exists, and we have to figure that out at a category level while we also are driving our business at a brand or product level. Let me shift to a question, a prepared question. So there was some McKinsey research that showed that 48% of financial services executives or insurance executives feel that cultural or behavioral change is the biggest challenge they face in producing some of these strategies. First, I wanted to get the panel's opinion about if they believe that's true. And then secondly, want to get your thoughts about, well, how do you address it if it is true? Want to kick us off?
Sure. So I told you guys about the vlog, but that's not really my day job. What we deal with mostly at trustedchoice.com is we connect 500,000 insurance consumers with over 20,000 independent insurance agents across the country every day. That's really what I do for a living. And in doing that, we have over 73 carrier partners. We actually just did a big integration with Ask Kodiak. Those guys are the bomb. If you're not on that platform, get on it.
Thank you.
And here's what I'd say about the question at hand. I think the largest problem today is the innovation teams themselves, and not the people that are on the innovation teams or that they exist, because I think both are incredible ideas. What's happening is we're peeling off innovation teams. Those teams are not empowered to make actual change in the organization, and oftentimes do not have the political power to take the conversations that they're having with startups, technology partners, vendors, what have you, and actually integrating them into the organization. So what you have is a CEO or an executive leadership team that says, we have to figure this stuff out and start to put it into our organization. Amazing idea. We're going to create this innovation team over here on an island that's going to start doing research. They find out a bunch of cool stuff, they bring it back, and now that never gets pushed down the organizational silos to make effective change. So I know that's not the case, that's a generalization, but I would say if there is an issue, that's what we've seen in the carriers that we've spoken to for the most part.
Right.
Well,
Any other?
Yeah, and I think navigating the politics of change is probably the biggest obstacle for anybody. And change is always hard, even for the right reasons. And unfortunately, inertia is very easy. And we come from a status quo, we've always done it that way kind of culture. So, one of the things I get asked a lot is, who is your biggest competition? And I quickly respond, your IT department. So, even trying to shift away from, silos, people kill me too because they talk about busting down silos. And I think silos are the organizational cockroaches that are going to outlive us all. And, silos are power and control to a lot of people. So the best we can hope for is to connect more elegantly those silos to get things done. You have to have that top level support, creating the organizational friction, pushing those initiatives down, because people on the front line, they want to do the right thing and they want to serve the customer. They're in the trenches. But my experience was that middle layer is frozen. And so busting through that layer is probably the biggest order of the day. And it's unfortunate. And that's, I think, why disruptors who don't carry the burdens of we've always done it this way, or the legacy systems and all the issues go with it, are particularly threatening right now.
So I'm going to quote you when I say silos are organizational cockroaches.
Yeah, that was a good one.
Yeah.
That's great. Miguel, did you want
I agree with everything that was said, and I'm just going to add one more element. If you're looking to bring new products to market, create new engagement platforms for your customer, and in your room you look around and at a minimum it doesn't look like what's on this stage right now, you got to look about your team, and you got to ask yourself what is going on organizationally from a diversity perspective to help you innovate for the customers of the future, which I'm telling you right now we're woefully unprepared to deal with. 30% of this country is going to be Hispanic in the next 4 years. We don't know how to deal with that. You look at policy language, you look at our offerings, and I'm not just saying that because I'm Hispanic, I'm a shareholder of my company, so I care a lot about this. We have to be better prepared. Look at our distribution channel, look at everything culturally about how we operate in this world, and you've got to really start pushing the diversity envelope at your respective companies, and in our industry, we're not doing a good job of that. We can do better.
And I'm not saying this just because I'm a baby boomer, but there are 10,000 of us every day turning 60. And then, the tsunami of millennials who have a complete, it struck me the other day, people who came before me were completely analog. Everybody who came after me is digital. And so we're kind of in a sandwich where we've had to continue to learn and grow and adapt and adopt to new things. I think that's the charge for corporations and companies everywhere.
Brian,
So,
one more point real quick.
absolutely.
I think the thing that scares me when I really think about the industry, and as much as I ran back and forth and yelled at you for 10 minutes, I really do love what all of us do across the spectrum. What scares me to death, and I actually had a conversation with Bruce Kelly about this a couple days ago, is that I feel like, to your point, there is this generation which holds all the knowledge, claims, underwriting, operations, sales, all this information. And because they don't gravitate towards tech, we're like, we can't wait to get them out. And the truth is, when they go, the knowledge gap from that generation to the generation that I'm kind of in the middle of at 37, I don't know half. I don't know a quarter of that. And when we are all of a sudden are supposed to take control, and I really worry that there's not this pass down of information happening, and that so many people are retiring so fast that we're going to lose an entire generation's worth of expertise in our business.
So do we have time for one more question? Yep, one more. I saw a question here when I had a question earlier. Is there a question from the audience that I may have missed?
Back here.
Yeah, one in the back.
Yeah, thank you.
You're welcome.
Chase Huey with RGAX. One of the issues that we see a lot of times and want to innovate around is the sales process at the front end. There's a lot of leakage that occurs with complex delays that occur with ordering APSs, grading underwriting decisions, et cetera. When it comes to the selling process in the front of the life insurance side or whatever, you guys particularly want to comment on, what are the problems you're most excited to see solved through technology in terms of increasing the speed of the sales cycle and conversions?
Alan knows you want to take that one.
So it took me 15 years to arrive at this place where, as a software engineer, through CTO to back to software engineer, is I don't even think of those things as technology, like solutions first. To your, what Miguel said something earlier, because I had this conversation recently with somebody in an Apple store. Some of the most interesting ways for us to sell is going to be how close we could put these insurance transactions to other things out there. So everyone will buy Apple Care when they're buying that iPhone, because they just spent, I don't know, what is it, like $1,000 now for the 10? And hey, how about another $80 to get and everyone says yes, or travel insurance, or they're putting it right at the point of sale where two things are happening. It's super convenient, and then there's this education that's taking place in terms of why you may want to have this in mind. And that to me, there's some folks out there who are starting to study that as much as anything else. And it's not a new idea. It's like Amazon's been doing this for years. I ordered something for my nephew the other day, and they got me for another 50 beans on a bunch of other stuff I didn't need, because they knew I needed turf builder, because May 1st is coming around in New England, and you got to get the turf builder down with the anti-crabgrass. We've got this inventory of data in this industry. Maybe banking is on the same level. It's amazing. The stuff that's in there is amazing. If we start figuring out that stuff, the technology is going to be the easy part. It's the technology's already there. It's understanding where we can put these other touch points is what's harder.
Yeah, I'd echo that, and I'd offer, just from a carrier perspective, I actually just saw a presentation just yesterday from one of our sister companies, Arity. We spun out an entire group that focuses on using different elements of data to come up with algorithms that are far more predictive of risk. And they've done a phenomenal job using driving data, and we're finding that it's more predictive than credit score, which most carriers have now gone to. So it's this constant evolution where we have to be ahead of the curve, looking at all of this data that's available and figure out how it is that we can collect this data with pre-fill. It's all out there. I mean, it's like this. I should be able to ask you 5 questions and get a good idea of your risk based off of the data that's out there. And if we can mechanize those elements, I think some of your problems are ameliorated in that I can just make a call to services, I can make a call to certain data stores, and then I can actually obviate a lot of the need for those long, intensive underwriting processes, or perhaps bind and delay full underwriting so that I can keep my customer happy for a period of time while I go through a full underwrite process. So those are some of the things that I'd offer that we just need to constantly be on the tip of the spear of to make sure that we're making that customer experience seamless.
I just want to follow up on Alan's point, because I think data is critical. Because technology, at the end of the day, could simply be a mechanism to deliver something, but where you can differentiate is based on data and using that data to turn it into insights. I remember there was a statistic that I heard, and I heard it from another speaker, so I'm going to assume it to be true, that something like 75% of the people who actually go into a gas station to pay for their gas are smokers. And the thought is that if you are not a smoker, you're likely going to pay at the pump. But if you're actually taking the journey to walk into the convenience store to pay for your gas, you're likely buying something else. And there's a high likelihood that what you're buying is a pack of cigarettes, right? So for a company like Philip Morris, that's valuable information that can distinguish them from their competitors. I remember many years ago, getting it back to insurance, I had a fairly minor car accident, and driving on the highway, wasn't really paying attention, car in front of me stopped, didn't stop in time, et cetera. And so fairly minor car accident, but at that moment I realized how quickly life can change. Having that information, it probably would have been a really good time for someone to send me a life insurance application. And so those are the things that data can do and technology can do to allow you to be at that, the Apple Care moment, right? To allow you to be at that point where the consumer is interested in your product enough to engage with you. Now, if they would have sent it to me probably 2 weeks after that, I'd have long forgotten about it, and I would have had a million other things on my mind, and it likely wouldn't have gotten my attention. I think that data is a critical component. So we're out of time. Thank you very much for your questions, and thank you, panelists, for your insight.